everybody, we are live. And I have Brittany with me on the other side of this, so she says hello. The reason why we wanted to do this Facebook Live was to connect with you and your families. I know a lot has been going on in the market, and there's a lot of questions around what's been going on. So first, I would like to mention that we have decided to postpone our first masterclass tomorrow. From 10 to noon. We don't know when it will be rescheduled, which is why we wanted to reach out to you and basically say, if there's topics that you are really interested in right now that you need for your business, we will go ahead and start creating content for you and sharing that with you starting tomorrow. There shouldn't be any waste of time right now, as time is of the essence in what's going on in today's market. So number one, just wanted to come on and say that we are postponing until a later date. The CDC says that you're not supposed to be in a room with more than 10 people at a time to prevent the spread of coronavirus, which we're taking very seriously. Brittany, what kind of questions do you have?
So I guess we can start with the beginning. What is going on in the market right now, John Brooks?
Okay, so this is like a interesting situation for someone who studied finance for many years, and the housing market and interest rates. This is a passion of mine. So the Dow has dropped 32% over the past 3 weeks from its record highs, which is incredible. And basically what a market is just how everybody's feeling about prices. It's just how they're haggling over the price of something. And right now there's a lot of fear built into that speculation. Brittany, you're exactly right. It's speculation. What's going to happen? How are things going to go down the line? There's a lot of things that the government's doing to preventing the spread. International travel is a huge one. You know, you see the cruise lines and the airlines be down about 60%. Other stocks are usually down between 30 to 35% at this time. If you think about who owns the wealth in this country, those people who have the most wealth are getting hurt the hardest from this, and those people who have the least amount of wealth, who are working hand to mouth, are also getting hurt the hardest from this. People who are in the middle class that are expecting to get their retirement funds, they're going to be, if they're retiring right now, that's going to be an issue as well. This was totally out of the blue. This is a once in a century kind of thing that is happening. Which is why the other day the Federal Reserve came in and said, we are going to cut short-term interest rates 0 to 3 months, which is 0 to 90 days, to 0 to 0.25. That is one of the functions of the Federal Reserve. The Federal Reserve it has the power to control the money supply in the United States. Hey, Chris. Yeah, this will all save, so you guys can watch this later. That's the Federal Reserve's function. They're a lender of last resort. And what they do is they provide liquidity to the system, and they provide stimulus through increasing the money supply. So there's a couple things that they have done, and we can talk about this later. There's a lot of nuances to all of this. But the number one thing is that they have influence over the short-term interest rate. And if you look at a yield curve, basically what banks do is they borrow at the short-term interest rates and they lend at the long-term interest rates. So there can be a liquidity crisis if banks aren't able to borrow from each other at the short-term rates, which is why the Federal Reserve came in and said, we are going to lower the rates, because let's say that they can borrow at 1%, but they can only lend at 1%. The bank wouldn't have any incentive to give the loan, which is exactly what happened. What we saw, it's called an inverted yield curve, where the short-term interest rates end up being higher than the long-term interest rates. And banks have a really hard time making money off of that. They want to make a spread between the short-term and long-term rates, and then they also want to make an origination fee off of that. So let's say, for example, that they want to give out a car loan to somebody, and it's a 5 to 7 year term, and they're borrowing money at every single day for 0%, and then they're getting 3% from someone else. Well, they would make a 3% spread plus the origination fee. They would subtract out a servicing fee and all that kind of stuff. So that's what the Federal Reserve came in and did is they fixed the yield curve, fixed it, right? The second thing that they did, Brittany, do you have any questions on that?
No.
Okay, I was going to draw this on a chart, but I figured it would be better to do it here. The second thing that they did was when you deposit money into a bank, essentially what happens is they have the right, that bank has the right to go out and lend 90% of the deposit. The 10% that they keep is called the reserve requirement. Well, they changed the reserve requirement from 10% to zero. So now they're able to lend out 100% of deposits. This is an incentive for banks to continue giving out funds and loans to people. And then what they also announced was the Federal Market Committee basically said that they're going to use open market operations and buy treasury bonds and mortgage bonds to be able to provide liquidity to the market, and that's called quantitative easing. What that does is it brings down interest rates potentially on the long run. Again, they cannot control the interest rates. They can only influence it. The bond market is massive. I think it's like 4 or 5 times larger than the real estate market and its derivatives. And they cannot absolutely control it. There's only a certain amount that they can do. $700 billion is a ton. So they're influencing the yield curve to make sure that the market is sustainable and that there's liquidity involved. So that's a little finance thing right there. And the reason why I bring this up is because these are important conversations to be having with your clients. It doesn't necessarily mean that you have to go into that detail, but their questions that they're asking is, are interest rates going to come down? And the real question is that the Fed doesn't bring it to zero. It doesn't have complete control over the market. And banks, if the numbers don't make sense, they won't give out loans. I mean, that's just, why would they if they can't make money doing it?
Yeah, this does not mean that interest rates are at zero, like you mentioned in a previous post.
Yep.
It just could influence what happens to interest rates should the banks decide.
Yep. So there is no question that we are going to go into a recession. A recession typically means that there's 2 consecutive quarters of negative GDP growth, which is 70% consumer. Well, if you shut down a country for 2 months and it's a fear-ridden country, then there's no way that we're not going into a recession here. And that has a lot of impacts for your business and the way that you talk with clients. So what's your question, Britt?
So no question, but just to add to that is that doesn't mean it's going to be a severe recession, right? We're not saying that we're going to see something like the financial crisis, 07 to 09 and beyond. However, there could be negative growth, right? We've had such intense growth for so long that I just don't see, and we've just been talking about this, there's no way that it wouldn't just go down at least, a decline for 2 quarters.
Yeah, there's going to be a decline for 2 quarters. And
that's what a recession is.
That is a recession. Brittany has a good point. The setup isn't there. We don't have any systemic problems. This is a health crisis. The reality is, though, consumer perception is everything because it's 70% of GDP. So because if buyers are not feeling good to buy, it can slow your business. So one of the questions that you want to answer is, how long can I survive through the next few months? Let's imagine that the country goes on lockdown and we aren't able to close loans. What if title companies close? How long can you and your family survive at your current rate of spend and output from your household and from your business over the next couple months? And this is the number one thing. Get real, get right on your business. The number one thing that everyone should be doing right now is looking at their budget and eliminating anything that is non-essential, because those who cut now and cut fast and cut deep, when the market comes back, they will be prepared to take it on, and it will come back. We don't know when it will come back, but I can share with you that I have reached out to top performers across the country today having conversations, and showings are down by more than 50%. It doesn't matter what you have heard or if you've had a multiple offer situation going on. There's no way that the market is going to go down 32% and the real estate market's not going to eventually trend after it, especially when we have a worsening crisis with the coronavirus, which is absolutely expected to happen over the next couple weeks. Fear is not very good for people buying houses. That is just the truth. And so there's going to be less views. There's going to be less showings. Less showings means less offers. Sellers will need to get realistic. Now, this is also price range specific. People who lost a lot of their portfolio in the higher price ranges, perhaps luxury, will be hit the hardest, and perhaps new construction in higher price ranges will be hit the hardest. The bread and butter business. So the number one thing is to look at your budget, Delete anything that is non-essential. The second thing is to start focusing your business towards the bread and butter price ranges, which is 200 to 400,000 resale market, not necessarily new construction. This market will continue to move on, as we talked about in one of our other classes. Regular resale during the last financial crisis only dropped 11%. That's it. It took a little bit longer for things to sell, but they still sell. New construction dropped 80 to 90% based on the numbers that I recall from the classes that I've attended.
Now, is that nationwide or is that area specific?
It's nationwide. Okay. Nationwide.
Those are nationwide averages, which means that some areas could have experienced different figures depending on how hot or cold the market was in those specific regions. But on a nationwide average, those were the numbers.
Yeah, and we've talked about this too. Jacksonville is very insulated, which is great. We've got the Navy, we've got hospitals, we have all these other businesses. These businesses are still going to run. They're not going to go out of business. I really doubt that we're going to see that kind of dramatic event. This is a short-term, next 2 to 3 months, maybe 4 months of what we're going to observe in the market. What other questions do you have, Britt?
So, I think when we talk about just securing your finances, getting real with your numbers, understanding your budget, that goes for personal and business.
Yes.
So that's just kind of like a blanket observation for all people, and especially business owners.
Well, number one, I think, is having a budget.
Well, yeah.
Knowing your numbers, knowing what your household budget looks like, knowing what your business budget looks like. This could be, for some agents, the best opportunity ever to get real with your numbers and get real with your business, because the reality is that agents are going to leave this industry through this shift, and it's not going to be because they're not selling houses. It's going to be because their expenses are too high. That's how you go out of business. You don't go out of business by not selling houses. You go out of business by having too high of expenses, and that's true with every single business. The best thing, here's a conversation that I would encourage having with your sellers. Stocks are companies. It's the ownership of a company, and they go out of business. Real estate does not go out of business. The whole reason why you buy real estate is for cash flow and appreciation. Maybe you don't get the appreciation this year, but you get the cash flow and you lock in the interest rate for 30 years. You're not going to go out of business. The only way it would go out of business is if it had a fire or a hurricane, got rid of it, and even then you have insurance to cover it.
Or zero.
The stock market, it can go to zero. Like Exxon could be a thing of the past, because we're also dealing with an oil crisis. Oil is going to be an issue as well, because there's going to be inflationary issues. There could be deflation. We could see negative interest rates. These are just some of the things that could happen, that could play out long term. It's very unlikely that it will. This is probably going to be a short-term impact, but it has an opportunity to get your business right. So number one thing is talking about real estate as an asset class is a great asset class to own right now, regardless of what's happening in the stock market. But that doesn't mean that buyers are going to be out there having a sense of urgency to buy until a lot of that fear is gone.
Yeah. There's going to be initial fear. What does this mean for me, my wallet, my family, my future? And then once people get their answers and they start to use their logic, and the logic overcomes the emotional fear.
Yep. And it'll probably be some time until people get off the toilet paper craze. But honestly, you can look at this two ways. You can say, hey, I'm terrified, or you can say, hey, this is happening for me. This is not happening to me. This is happening for me because this gives me an opportunity to have this significant conversation with my significant other, get our numbers right, get them straight, come up with a budget. If you want help with the budget, I'm here for you. Bruce is a guru with budgets. You can more than happy to connect you with him. But the first thing to do is to cut deep on a lot of the expenses that do not provide you any sort of value. The only thing that you do not cut ever is your education budget. That's the one thing that you should continue to have going for you at all times, because knowledge is power and it'll come back to you during the long run. What kind of questions do you guys have? I'm thankful that you guys are on watching this with me.
Yeah. We have a lot of real estate agents that are probably watching. So we talked about getting real, get right with your numbers, your budget, as well as continuing to, my gosh, I just blanked. What are some other things that a real estate agent should focus on that we may not have mentioned? Specifically, a real estate agent.
Yeah.
For their businesses.
Guys, go ahead and ask some questions.
Or concerns. What are we thinking?
I wouldn't say I'd be concerned in any way other if you're reducing your budget, honestly.
I'm sorry, education is what I was saying. Getting real with your numbers, continuing your education.
Yeah.
Having the conversations with your customers.
Yep. So, Chris, we had a conversation earlier, how do I price my property right now? It's a luxury property. Well, it's a matter of giving them a range of the last 3 sales and saying, based on what you've seen in the news and what you've heard from your friends and family, where do you believe you should price the home? Are we at the top of the market, middle of the market, or bottom of the market? Have that conversation with them and guide them along the way. It's like, okay, well, you see the stock market's tanking. So what does that mean for real estate in the luxury price range? Just ask them the question, put it on them, have them answer the question. Most logical people would say, oh, well, that means probably luxury will be hit pretty hard. So where should you price it? Top, middle, or bottom? Bottom. Okay, well, the bottom price in this range was $760. You told me you wanted to list it for $800. Maybe what we do is we go in at $780 for 2 weeks and we see what happens. And then if not, then we reduce the price further. The best thing is that if prices come down for the sell, then it's going to come down on the buy as well for most people. So it doesn't really matter when you sell or buy if you're doing both, because you're just trading the property one for another.
I'm doing it for the right reasons. You buy right, you sell right.
Yep, exactly.
We can't speculate into the future.
What is the number one thing we should be doing besides getting our budget together in education? Juanita, great question. I'm going to be frank with you guys, getting your health in order. This is a wake-up call for anybody who does not have their health in order right now, because this virus is impacting people the most who have pre-existing conditions, which mostly occur from being overweight or smoking or some other aspect of that. Getting your fitness, this is time that you can have while you're staying at home to go do education, spend the time to get your health correct, come up with a game plan and really focus in. Brittany and I will be here every single day for you guys to discuss your businesses and what you want to do with it. And so you just have to message us with a topic and we'll create a video for everybody to be able to look at, or give you a call one-on-one. We can do a Zoom call, whatever you need to be done. But this is really a good time to look at your business and your life. When you go through these type of crises, you usually find out that the most important thing is not necessarily money, it's relationships and health. And number one for relationships is this is a relationship business, and this is a great opportunity to reach out to those clients that are important to you, reach out to your family that you haven't talked to and connect with them, because that's what life is about. The money will come and go. But at the end of the day, it does make sense to get your money right because you'll come out on top of this better. But again, health and relationships are number one. They probably always will be. Any sort of giant event that is scary reminds us all of that, and I think it's a great reminder. How do you see this impacting rent prices? Okay, so great question. So right now, Carl Icahn, who's a notorious investor, was out there. He did the biggest short on commercial real estate ever because he believes that the tenants in the retail plazas won't be paying their rent because a lot of them are also living hand to mouth and over leveraged, and he believes that there's going to be a lot of defaults going on. But if somebody defaults, what are they going to do? They can't find another tenant in a crisis. They're not going to be able to swap, have power to swap someone else in. They're just going to be missing payments, and that eventually goes to the bank and causes a default. Well, this happens with apartment complexes too. If people lose their jobs and they're not able to pay, that's going to create vacancies. Maybe they're going to have to all move in together. I don't know what it will do to rent prices, but I believe that it will cause a little bit of less demand for the higher priced rents. The lower priced rents will probably still do fine, like under $1,300-1,500 will probably do fine, but the higher priced rents will be will be better. What's that, Brett?
So we don't know. Like
we don't know. And if anybody tells you that they do know, they're probably wrong. But I believe in supply and demand, and I think that there will be more supply. We've seen a lot of new buildings go up that are not completely rented out already. And honestly, we were kind of going into a market that was changing anyway before this crisis showed up. So I think that rent prices, maybe they'll stay stagnant, but I don't think that they'll be going up as fast during a crisis like this. Working on farming and internet leads. Yeah, I mean, this is a great time to call people and provide value. People need agents now more than ever because we're the ones who are giving them guidance. The whole reason you hire an agent anyway is you provide perspective. That's it. And your perspective is based on the numbers that are in the market, which will come out over time. We don't have an accurate picture. There's a delay. That's why I kind of did a survey today, just saying like, hey, what is everybody experiencing? Okay, everybody's experienced 50% less showings. So that's just perspective. And so people are going to hire the person that they trust the most, that have the best perspective, and the friendliness factor will probably matter a lot less. Like you could be a go-lucky, happy person and be in the business the last 5 years and have a rock star business. Well, when the market gets tough, people hire the people who are extremely motivated, are willing to do whatever it takes, and know their numbers. And so you want to become the economist of choice for Jacksonville. And so over the next coming weeks, we will put together marketing materials on, hey, this is how it impacts the Jacksonville market. Maybe it has a great impact, maybe it doesn't. It doesn't really matter, but the key thing is that you become the expert. Real estate's still going to sell. It's just going to be a little bit harder to sell over the next couple months. And that's fine as long as your budget is where it needs to be so you make it through. And then if you're doing activities, I would double down right now. Mm-hmm. Now, I can tell you this, the number one thing that matters, and Chris and I had this conversation the other day, is motivation. There's going to be a lot of people out there who are going to be like looking for a deal and this and that. If you do not qualify your client, it doesn't matter if it's buyer or seller. That's regardless. You just want to find people who are truly motivated, asking the motivation questions. If we were to find the perfect home for you today, would you purchase it? If I brought you an offer for X amount, would you take it? These are questions to ask the clients while you're working with them. Brittany, do you have anything to add to that?
That's perfect. It's so true.
It is so true. And the idea...
the time you waste could be the time that you are actually getting qualified candidates. And it's going to take a lot of time right now. Probably more time than usual.
Yep.
So where are you focusing your time and energy?
More listings on the market means that buyers are going to view more homes. Viewing more homes means it's going to take you more time. If I was in this business full time, I would be looking for listings with motivated sellers. That would be the number one thing to leverage your business. And frankly, it's like that all the time. But right now, like the last 5 years, it was easy to get a buyer because it was just so easy and natural. And then you would go out and show them like 2 homes, and because there were only 2 options. Now they're going to have probably a few more options. It might be a little bit more affordable because interest rates are lower, but their motivation is going to be a lot less, and it's got to be the perfect fit for them because they're operating from a fear mindset.
Yeah. I would also say if you can sustain your business in this market, what will it look like when many, I don't know the exact number, agents have dropped out because it got too hard. And now you're one of the few agents that are still remaining in the game, and you are there as the resource when all the other agents are gone.
Yeah, you hit the nail on the head. This is a period to pick up market share. Other people are going to be freaking out. They're not going to be doing their homework. They're not going to be doing their lead gen. They're going to give up. It's not going to be easy to do anymore. Those people during the last recession that came into the business during the recession are the people who are number one in the world right now. Mm-hmm. Ben Kinney, Tim Heil, pretty much everyone that we've met at these top 100 groups, it didn't just happen in like 2016. They just like showed up and they were like, no, what happened was I was in the middle of the recession, and during the recession, I just thought that calling 500 people a day was just completely normal because that's what it took to get a deal done. And they just took that work ethic with them, and the market got good, and all of a sudden they're number one in the country with expansion offices teaching people, okay, like what systems do I have to do to actually make that happen? What does my mentality need to be to make that happen? And that's another key thing. Keep your cool. It's okay. There's people who've been there before us. This has happened before. This is something that with the right tribe and with the right mentality, you can come out on top way further ahead than you were before. And that's true. I mean, Brittany and I had this conversation, like we're going to dig into our health over the next couple of weeks as much as we possibly can. And this is something that's an opportunity for us. We're going to be having a lot of profit conversations with agents because that's the number one thing. Luckily, all of you are here, and we're at a brokerage that is, low expense business. Like we're not taking more money from you than what you actually make. And there's a lot of brokerages out there. So, and that can make a big difference when you have one closing that's make you $8,000. You don't have somebody who's taking half or 36% of that amount. That's extra money in your pocket that you're going to come out way better down the line. All right, new comment. Any sort of tweaks we should be working into our scripts, Bryce? And thanks for the question, buddy. Yes, the market has changed in 3 weeks. So it changes everything, just like seasonality does throughout the year. And this is a conversation that we can have at another time. But in February, people are expecting to get their tax refunds back. They use those tax refunds to go put as a down payment to purchase.
Starting in February.
Yeah, it starts in February. That's why the market picks up so much in February. And then it slows down when?
Fall.
Why?
School has started.
School starts. It literally drops 50%. We live in a cyclical business year to year, and that's a cycle that happens every single year. Well, business cycles occur as well, and they happen every 10 years. So if you're going to sell right now and you're going to wait to buy, then you are selling at the low and you're going to be buying at the high. And there's some people that get trapped in this cycle of being, just operating out of fear, and they sell at the low, and then once they feel comfortable in 10 years, they buy, and they get stuck, and they always end up buying at the wrong time and selling at the wrong time. I think the scripts are tweaked because we're going to be focused not on likability. We're going to be focused on getting the job done and being realistic with the clients. If you take a listing and it's not going to be market, there'll be big issues for you.
That's where the motivation conversations become key.
Yeah. You got to dig on motivation, guys. You guys should not be going out to any listings. You should know if you're going to want to take the listing and know if you get it before you go out. So how do you do that?
And I think he's probably also referring to, which Bryson, we can talk to you, but he's probably also referring to people when you're on these consults and they're panicking, well, what if the market goes up or down? Like, we don't know what's going to happen. Are you buying and selling for the right reasons? Digging into that motivation. What are your goals, right? Someone trying to play the market, it's probably going to be a disaster. You just don't know what's going to happen.
We don't know what's going to happen, but we've studied history before. I don't know what's going to happen, but I can tell you right now that showings are down because fear is up. And if you're looking to go on the market for a luxury listing and you're trying to overprice it, it's not the market we were at 2 to 3 years ago. It's just a totally different conversation. It's based on data and facts. And if they're not realistic on what's going on, then you just need to move on and go find the motivated. It's okay. You don't need to take every single listing if you don't believe it's going to sell. Think about all the time it's going to take you and all the money that it's going to take you in marketing dollars to be able to get that listing sold. So time, the time that you spend on the phone with this person, the time it takes to list the house, the time it takes to go out and make sure that it is properly marketed. Maybe you're paying $100, $200 for the photos and the video, and it doesn't sell, and you have a frustrated seller that's yelling in your ear every single week, why hasn't it sold? And those are the people that you want to stay away from. The motivated people will price it where it needs to sell. Okay, and that's always the case. If someone's fighting you on the price in today's market, then you need to have a lot of conversations with them to get them to be realistic. And if they aren't realistic, then you need to move on. We just dropped a $1.6 million listing in Queens Harbor last week because we weren't getting the number of showings that they had expected, and I shared with them the data that no listings have sold and in their price range for like 45 days. So there actually isn't a buyer at their price point that is buying. It just doesn't exist. And the way to attract a buyer would be you need to reduce the price. And they were very unrealistic. They started becoming condescending. And I just was like, you know what? I think it's better if you find another agent that works for you the way that you want to, because obviously our expectations are misaligned, and that's fine. It's totally fine. It's better for you to focus on those people who are really serious about selling than just getting a listing, listing it, and all those conversations at 7 o'clock at night on a Saturday when you should be with family. You just avoid all those headaches. And that's been something that Brittany and I have been very passionate about, is avoiding those clients that are unrealistic and provide headaches and live their life in emotion. And we can't help in the end. What other questions do you guys have? Let's see here. I see Jeremy, Riley, Manny. What's up, guys? What would be some of the topics that you're most interested in learning about that we can focus on tomorrow? Because at the end of the day, it's likely that we're not going to be doing the classes as scheduled. So I'd rather spend time with you guys to answer any questions that you have. We can go over any documents that you want to go over. We can do listing consult, buyer consult, all this kind of stuff together. We can record it. We can do it virtually. What information would be most helpful for you right now in your business?
Why don't we make a list?
And we'll make a list and we'll tackle it. We won't do it tonight, but we'll get it done for you. Okay. Well, buyer's class. Yes. So, Chris, when you say buyer's class, what specifically are you looking for? Because there's a lot of different things. Is it pre-qualifying? Is it showing the home? Is it negotiating contracts? Is it how to bulletproof your transaction to make sure it doesn't go to crap because the market's going to crap, and how to keep expectations in line? Juanita, lead gen. Lead gen is really important right now. When can we do that? Possibly online. Yes, we can definitely do the buyer class online with Brittany. She can start showing you how she does her consults. Anything else that you're looking for, Chris? Juanita, for lead gen, the number one thing, to be frank with you, that's going to have people come out the best is attacking FSBOs and expireds, because it's the cheapest lead source. It's listing based. It focuses you on scripts. If you have a script in an expired or FSBO, it's the same script that you're going to use when you go in and just take a regular resale client. You're going to want to know those scripts front and back regardless. And I'm more than happy to go over them with you and record a video so you can hear how we do it and adjust your script the way that it needs to be done. For the buyer qualifying, I think that's probably the most important, since that's where the most time is spent showing homes and making sure that you're actually working with motivated people. With sellers, it's very simple. It's either going to be priced right or it's not. Most of the time, it's not condition. If it is condition, then it can be staged, and there's a lot of things you can do. We have Joseph Hernandez on here, who's a handyman, and he helps with a lot of contractor work, so he can help make sure that the house looks great, it's in great condition. I need help with that. With what? With what? Need just a little bit more information there. And negotiating and pre-qual from Chris. Okay, so in terms of negotiations, we can definitely dig into that. So just shoot us a message, and we'll get a list together of topics that we want to discuss, and we can go over it together. Super grateful. Shout out to Kirby. He's out there as a first responder. Shout out there for Damon as well. It's really tough for everybody right now. I know everyone's on high alert, so super grateful for those people. And remember, Brittany and I are here for you. We want you to reach out to us if you have any questions, if you have any deal questions. This is what we love to do, and we can provide you any information. If we don't know, we have a lot of mentors that might. So just get with us if you have any questions, and we'll talk soon, guys. Have a good night.